All right, so we're diving into what's been pretty wild week for the markets, especially for those big tech companies. I know you're watching Apple, Amazon, Tesla. I mean, it's been a rocky start, right? Major indexes are down, and I bet you're looking for some clarity with all this noise going on.
Absolutely. And you know what? We've got some good stuff for you today. We're going to be hearing from two financial commentators, and they have very different styles, which I think will be really interesting.
It's like getting a second opinion on your portfolio.
Yeah, exactly. So they're both looking at the same market events, but they come at it from different angles. And we'll break it all down, figure out what's really important for your own investment strategy.
I like it.
The thing is, though, they both agree on one major thing right off the bat. The market is looking pretty weak right now.
Yeah, definitely not what anyone wants to hear.
No. The S&P 500 is down, and get this, the only sector actually showing gains is energy.
Okay, yeah, that is interesting. So what's going on with that? What's causing all this jitters in the market?
Well, it's actually a few different things all happening at once. So we've got those geopolitical tensions in the Middle East, and of course that's having a direct impact on oil prices, driving those up. And then you've got the after effects of the hurricane impacting certain sectors. And to top it all off, we're about to head into Q3 earnings season, which always creates uncertainty.
Oh yeah, earnings season, always a bit of a nail biter. So you've got global unrest, hurricanes, and then the always unpredictable earnings season.
Yeah, no wonder investors are a little on edge. So let's talk about our first analyst. I think I'm going to call him the chart whisperer.
Okay, I like it. He's all about that technical analysis, right? Charts, patterns, the whole 9 yards.
He's glued to those charts, looking for any little clue about where prices might go next. Like he's reading the market's mind or something.
Reading the tea leaves of the stock market. So what's the chart whisperer seeing in the market's future right now?
Well, he says we've really got to buckle up because we're heading into earnings season. You know, he's expecting to see continued volatility for the next few weeks at least, especially as those earnings reports start rolling in. And for you, that means those tech stocks on your watch list, they could be in for a wild ride.
So not really a time to be making any rash decisions then.
He's urging caution right now, especially about chasing rallies. He thinks it's much wiser to wait for those pullbacks, which is going to give you a much better risk-to-reward ratio.
Don't buy at the peak of the wave. Wait for it to come back down a bit.
Exactly. He doesn't say to stay out of the market entirely. He actually sees some potential buying opportunities, especially if certain stocks drop to those specific price levels, like support levels.
So those act like support beams, and if the stock falls to that point, it might actually be a good time to buy.
Exactly. And he's got his eye on Apple, actually. If that dips below a certain point, he thinks it could be a good time to buy.
Interesting, especially since you mentioned Apple specifically. So he's seeing opportunity in those dips, but only if they hit those special price points he's identified.
It's like bargain hunting, but for stocks.
Love it. Okay, so that's our chart whisperer. Now let's move on to our second analyst. I think I'll call this one the news navigator. He's all about connecting the dots between what's happening in the world, the news, global events, and how that might impact, overall market sentiment.
He's looking at the bigger picture, how news and events might change the way investors behave.
Right. So while the chart whisperer is all up in those charts, the news navigator is reading those headlines. So what's the news navigator's take on everything that's happening right now? Is he as cautious as the chart whisperer?
Well, he's definitely acknowledging the short-term risks,
Okay.
especially those potential earnings disappointments. But, and this is where it gets really interesting, he's actually more bullish on the long-term outlook for the S&P 500 overall.
Hold on, more bullish? When everyone else seems to be hitting the panic button, what's he seeing that others aren't?
Well, he's really looking past all this immediate stuff and focusing on other factors, things like recent economic data and even the upcoming election. He thinks that could actually create some opportunities for the market to adjust.
Interesting. Okay, so he's not ignoring the current risks, but he's seeing a potential silver lining in the long run.
Exactly. And here's the real kicker. He's predicting the S&P 500 could actually hit 6,000.
Wow, 6,000. That's a bold statement, especially with everything going on. That's quite a jump from where it is now.
It is. So that's something we're going to definitely unpack, his reasoning behind that prediction. He's basing it on a few different things, like his own analysis of earnings projections and how he sees the market reacting after the election.
So it's like he's saying, hey, yeah, there's some short-term drama, but keep your eye on the bigger picture here.
Exactly. But of course, he's not completely ignoring those short-term jitters either. He does say it's really important to keep an eye on the VIX, the volatility index, as a way to gauge how fearful the market really is.
Yes, the fear index.
Yeah.
If it's high, everyone is on edge, expecting those big swings. If it's low, things are a bit calmer.
Exactly. It's like checking the market's temperature.
I love that. Okay, so we've got one analyst waving a little bit of a caution flag and another one who's maybe seeing a rainbow on the horizon. It's almost enough to make your head spin trying to figure it out.
And that's exactly why we're here, to help you make sense of it all and figure out what actually matters to you and your investment strategy.
Exactly. You mentioned earlier that both of these analysts had some really interesting takes on specific stocks, especially those that you're keeping an eye on.
Yep.
Should we dive into some of those?
Let's do it.
Okay, so let's start with Apple, since I know that one's been on your radar for a while. Our chart whisperer, true to his name, is seeing some potential buying opportunities, and it's all about those technical levels he was talking about.
He's looking at those charts, and he's basically saying, okay, this is where I can see Apple's price might dip a bit, and if it dips to this level, that could be a prime time to buy.
So he's not necessarily looking at the company's performance or anything, just purely the charts.
Right. It's all about those chart patterns and historical price movements. He's not focusing so much on earnings reports or new product launches or any of that.
Interesting. So purely a technical play, not based on the company's actual, intrinsic value or anything.
Oh.
Okay. So that's the chart whisperer's perspective on Apple. What about our news navigator? Does he share the same kind of optimism, even if it's for different reasons?
Well, this is where it gets kind of interesting because their views actually diverge a bit when it comes to Apple. The news navigator is actually sounding a bit of a note of caution about Apple.
Oh.
Yeah. He specifically pointed out that JP Morgan, the big investment bank, they actually downgraded Apple's stock.
Downgrades. Never a good sign.
Yeah.
What's their reasoning there? Are they seeing something that maybe our chart whisperer missed?
Yeah, they're mainly concerned about the iPhone 16 sales in the near term and even the iPhone 17. They're saying that while AI is definitely promising for Apple in the long run, they don't think it's going to be as big of a game changer as some people are hoping for when it comes to these upcoming phone releases.
Interesting. So two completely different perspectives on Apple right there. One's looking at the charts, suggesting a potential dip and then a rebound, and the other is more focused on those fundamental concerns about iPhone sales, like two sides of the same coin.
Exactly. And it really highlights why it's so important to consider multiple viewpoints before making any investment decisions.
For sure. All right, so we've talked a lot about Apple. What about Amazon? What insights did our analyst gather on that front?
Let's see. For Amazon, our chart whisperer, sticking to his roots, noticed that even though it briefly went above a certain price level last week, it hasn't really shown the strength you might expect. Like, it almost broke through, but then hesitated.
It's like it got up to the dance floor, but then decided to sit back down.
Yeah, exactly. And to make it even more interesting, another bank, UBS this time, also downgraded their rating for Amazon. They're worried about growth potentially slowing down.
2 downgrades in one episode. That has to be some kind of record. But our chart whisperer is maybe a little more optimistic. Again, just based purely on the price action.
Right. He points out that even with these worries, Amazon's stock is still sitting above what he sees as a strong support level, which is around $175. So because of that, he thinks it could actually be a good long-term hold.
Every time some news comes out that's maybe a little negative about Amazon, he's there with something positive based on the charts.
It's all about the charts for him. But our news navigator, he's thinking more about the news and how it might play out long term. He's really paying close attention to how Amazon's navigating the whole e-commerce world, especially with all the competition popping up and how people are changing their spending habits.
Yeah, online shopping is totally different than it used to be.
For sure. So he's looking beyond these current headlines and trying to see how Amazon's going to adapt and change over the next few years.
So don't count Amazon out just yet.
Exactly. He thinks they've still got a few tricks up their sleeve. Now, what about Tesla? That's a company a lot of people are talking about.
Right. Everyone wants to know about Tesla. What's the latest on Elon Musk's pride and joy?
Well, he did point out that Tesla's stock has been on a bit of a roller coaster lately, lots of ups and downs. But even though there was some negative news and the stock price actually closed down today, the trading volume was pretty low. And he thinks that's actually a good sign, maybe a sign that the selling pressure is easing up a bit.
It's like reading between the lines of the stock market. I like it.
Exactly. And he also said that everyone's got their eyes on that Tesla event coming up on October 10th. They're supposed to be making some announcements about their self-driving taxi service, and that could really shake things up, both in a good way and a bad way.
So watch that space, everyone, when it comes to Tesla.
Exactly. And speaking of things to watch out for, This week is actually the official start of the third quarter earnings season.
Right. You mentioned that earlier, and I feel like everyone's kind of holding their breath to see what happens. Why is this particular earnings season so important, especially if you're just trying to make sense of all these market moves?
Well, it's really the first time we're getting a real look at how these companies are dealing with all the craziness that's been happening. All this global uncertainty and the economic worries we've been talking about. Earnings season will show us how it's really impacting them.
So it's about more than just the numbers themselves. It's about the story behind the numbers.
Exactly. And our news navigator specifically said to keep a close eye on the financial sector, especially the big banks. If their earnings look good, it could give the whole market a boost of confidence, like a sign that things aren't as bad as everyone thought. But if the bank earnings are disappointing, well, that could make investors even more nervous.
Yeah, it's like those banks are the first domino in a long line of dominoes. And if they fall, who knows what will happen.
Right. So it's going to be a very interesting few weeks to see how it all plays out.
So we got a lot on our plate. Earnings season, those global tensions, the after effects of the hurricane, and the election coming up. It's a lot to process.
It is.
So what's the key takeaway for someone like me who's just trying to make sense of all this and make smart decisions?
I think the biggest thing is to just stay informed and be prepared for some more ups and downs. Don't freak out and make any big decisions based on a day or two in the market. Remember, both our analysts, even with their different styles, are giving us clues about what to look out for.
So drown out the noise and focus on the signals that actually matter to me and my goals.
Exactly. And don't be afraid to adapt. Your strategy might need to change depending on what happens in the market. Investing is definitely a marathon, not a sprint.
Words to live by. Now, we've covered a ton today, but we've only scratched the surface of what these two analysts have to say. They've got even more insights about other stocks and trends that are worth checking out, but I think we'll save that for our next deep dive.
Sounds good to me. It's funny how those market jitters we talked about, they can actually create some really interesting opportunities
Right.
in certain sectors, like energy, for example.
Right, we haven't even touched on that yet. You mentioned earlier that it's the only sector that's actually in the green right now. So what's going on with that? What's driving those gains when everything else seems so shaky?
Well, our chart whisperer, he's pointing to the classic case of supply and demand.
Okay, that makes sense.
Those geopolitical tensions we talked about in the Middle East?
Right, right.
Those have a huge impact on oil prices. So as those tensions rise, so does the price of oil.
So even with worries about the economy maybe slowing down, the energy sector is actually benefiting from all this global uncertainty.
Exactly. And it's not just about the Middle East either. You got to remember, the global economy is still recovering from the pandemic. And to keep that recovery going, it takes energy, a lot of it. So that increased demand combined with those supply concerns, yeah, it's creating like a perfect recipe for higher energy prices.
Okay, yeah, it's all starting to make sense now. So that explains why energy is doing so well right now. What does the chart whisperer see happening with that going forward? Is this a trend that's likely to continue, or is it going to fizzle out?
Well, he's got his eye on oil prices. He's identified what he's calling a key resistance level around $85 per barrel. Think of it like a ceiling. If oil can break through that $85 ceiling,
What happens?
could mean even higher prices are on the horizon.
Which would be fantastic news if you're an oil company. Maybe not so much if you're just trying to fill up your tank at the gas station.
Right.
Yeah. But what about the really long-term view? Because everyone's talking about renewable energy and getting off fossil fuels. So how does that factor into all of this?
That's where our news navigator comes in, always thinking 10 steps ahead. He's been following this whole transition to renewables very closely, and he definitely thinks it's going to happen. He says it's inevitable.
Yeah.
But here's the thing. It's not like flipping a switch, right? We're talking about a gradual shift over a long period of time. He actually thinks it'll be decades.
Oh, wow. Okay. So a slow transition.
Yeah, he sees it as a multi-decade kind of dance,
Okay.
where those traditional energy sources like oil and gas, they're still going to be important players, even as renewables start to take up more of the market share.
So it's not really an either-or situation. It's more like an and situation.
Exactly.
There's room for both, at least for now.
Yeah.
That's really interesting. So for people who are looking at energy as an investment, it's about finding that sweet spot, right?
Yeah.
Short-term gains, but also considering that long-term shift towards sustainability.
Exactly. It's about being smart and diversified.
Smart and diversified. I like it.
And, speaking of sustainability,
Yes.
electric vehicles,
Yes.
EVs,
EVs. Everybody's talking about EVs. But are they really living up to all the hype? I mean, in terms of people actually buying them, but also as an investment opportunity.
Right. It's the million-dollar question. I mean, there's no doubt that the EV market is growing like crazy, but and but it's also becoming incredibly competitive.
Oh, for sure.
You've got the big established automakers going head to head with all these new EV startup. Everyone wants a piece of that pie.
It's a total free-for-all out there.
Yeah.
So how does an investor even begin to make sense of it all?
Right. Well, the chart whisperer has noticed that a lot of those EV stocks have been on a roller coaster ride lately, especially in the last few months. And he thinks it's because of a few things. Like you've got ongoing supply chain issues, those pesky rising interest rates that everyone's talking about, and then just, general investor sentiment shifting around.
So it's not just one thing, it's everything all at once.
Right. Like the whole market's a little chaotic, and that bleeds into the EV sector too.
Gotcha.
But even with all that, he's still optimistic. He thinks that long term, there's still a lot of growth potential for EVs as the world tries to, go green and all that.
Right. EV's probably not going away anytime soon.
Exactly. But you've got to be able to stomach the ups and downs to get there.
Buckle up.
Exactly. Our news navigator, always one step ahead, though.
Of course.
He's been really zeroing in on battery technology.
Interesting. The battery. Why focus on that?
Well, because he actually thinks that's the key to this whole EV thing really taking off.
Okay. I mean, the battery is pretty important, right? It's
Yeah.
the heart of the whole operation. So what's he seeing on that front? Anything exciting? Any cool new breakthroughs?
He's really excited about advancements in something called solid-state battery tech.
Solid-state batteries. Okay, I'll be honest. I don't know anything about how batteries work. What's so special about solid state?
So think of it this way. Solid-state batteries are like the smartphones of the battery world.
Okay.
Compared to lithium-ion batteries, which are like those old flip phones, they can store more energy, they charge faster,
Wow.
and they're potentially a lot safer too.
So some major upgrades.
Major upgrades. And our news navigator thinks that whichever company figures out how to make these solid-state batteries affordable
Yeah.
and on a large scale, they could be the king of the EV market.
Oh, that's huge. So that's definitely something to keep an eye on.
Huge, for sure. Now, moving away from cars and energy for a bit, let's talk about a sector that's, well, let's just say it's been in the news a lot lately, and not always for the best reasons. Banking.
Banking. Yeah, it seems like every few months there's a new crisis or scandal.
It's been a wild ride, that's for sure.
So what's the latest? Are we headed for another 2008?
I wish I had a crystal ball.
Right.
But I can tell you, our chart whisperer has been seeing some red flags in the banking sector. Bank stocks have been down, and investors are definitely nervous.
Yeah, I bet. So what are they so worried about?
Well, those rising interest rates we talked about,
Yeah.
those are a big factor. They can really impact a bank's profits and how much they can lend out. And then, of course, there's always the worry about the economy slowing down.
Right, right.
Because if the economy slows down, people might not be able to pay back their loans, right?
Okay.
And that's bad news for banks.
Defaults.
Exactly. So it's kind of a waiting game right now for banks and the people who invest in them. Everyone's a little on edge, just seeing how things play out. But remember our news navigator, Mr. Optimism.
Always. Got to have a positive outlook.
Right. Well, he thinks that all this banking turmoil, it might actually be a good thing for some people.
Really? How so?
He's saying it could be a chance for some savvy investors to get in on some good deals.
Okay. Explain this to me. How could a potential banking crisis be good for investing?
Well, when bank stocks drop because everyone is nervous, that means you might be able to buy into some really high-quality banks at a discount. Think of it like buying a luxury car. That's a few years old. It's still a great car. It's just a little cheaper because it's not brand new.
Right, right.
But just like with those used cars, you got to be careful, right? You got to do your research, make sure you're getting a good deal.
Kick the tires a little bit.
Exactly. Look under the hood, make sure everything's running smoothly. So in the case of banks, he's saying to focus on the ones with really strong financials, a good track record of getting through tough times, and a solid management team.
So basically, look for the banks that are built to last, even when things get rough.
Exactly. It takes a little more work, a little more research,
Right.
but it could pay off big time.
It's the idea that people are choosing experiences over stuff, right?
Exactly. Travel, nice dinners, going to concerts, sporting events. That's what people want to spend their money on these days.
Yeah, it's about making memories, not just accumulating a bunch of stuff.
Exactly. So he thinks that the companies that really tap into that, the ones that give people something unique and memorable, those are the ones that are going to do really well in the long run.
Interesting. It's like a whole different way of thinking about consumer spending. All right, so it seems like exciting times for the consumer discretionary sector, but also some challenges as people's preferences change.
Definitely.
Now, let's circle back to something that's been a major worry for investors: inflation.
Oh, yeah. Inflation's a big one.
It feels like it's all anyone's talking about these days.
Yeah.
Prices are up everywhere. The cost of living is through the roof, and it's hitting everybody's wallets pretty hard.
It's a real concern. And it's not just consumers. Businesses are dealing with higher costs, too. And of course, investors are worried about what it all means for their money.
So it's like this ripple effect across the whole economy.
Exactly.
And what's the plan to deal with it? How do we get inflation under control?
Well, one of the main things that central banks all over the world are doing, including the Fed here in the US, is raising interest rates.
Right. The idea being that if borrowing money is more expensive, people will spend less. And that will hopefully slow down those price increases. But isn't there a risk with that? That if the Fed raises rates too quickly, it could actually hurt the economy.
Yeah, it's a tough balancing act. They're trying to walk this tightrope between controlling inflation and not causing, a full-blown recession.
It's a tough job. So they're really under the microscope right now.
Oh, absolutely. Everyone is watching them really closely. And our chart whisperer has been looking at the bond market, which a lot of people see as a good indicator of what might happen with the economy and with inflation, too.
Okay, and what's he seeing there? Anything interesting?
He's a bit concerned about something called the flattening yield curve.
I've heard that term thrown around, but I'll be honest, I don't really understand what it means.
Okay, so the yield curve is basically just a visual way to look at the difference between interest rates on short-term bonds and long-term bonds. Usually, those long-term bonds have higher interest rates, right? Because you're locking your money up for longer.
Right. Makes sense.
But when the yield curve flattens, it means that the difference between those short-term rates and long-term rates is getting smaller.
Okay, I'm following. So why is that a bad thing? What does it tell us?
Well, a lot of times it's a sign that investors are feeling less confident about the future of the economy. Like maybe they're not so sure about growth anymore.
So like a warning sign, potentially?
Right. Kind of like a canary in a coal mine, like you said earlier. It doesn't always mean something bad is definitely going to happen, but it's definitely something to keep an eye on.
Okay, so maybe some warning signs from the bond market. What about our news navigator? What's his take on all of this inflation talk?
Well, he's been laser focused on everything the Fed is saying, trying to read between the lines and figure out what their next move is going to be.
Like deciphering a secret message.
Exactly. And from what he can gather, he thinks they're serious about getting this inflation thing under control, even if that means those interest rate hikes we talked about.
Yeah.
It might have to be bigger than people are expecting.
So it sounds like we might be in for higher interest rates for a while.
It's definitely looking that way.
Well, that's rough for anyone who needs to borrow money anytime soon.
Huh.
But I guess it's good for savers. Maybe we'll actually start seeing some decent interest rates on our savings accounts again.
Right. Every cloud has a silver lining, I guess.
I like it. Always got to look for the positive. Speaking of which, before we wrap things up, can we go back to something you mentioned earlier about knowing your own risk tolerance as an investor?
Oh, yeah, absolutely. That's huge.
I feel like that's one of those things that everyone always says is important, but I'm not always sure what it actually means.
Right. It is one of those things that gets thrown around a lot, but it's crucial.
So how do you actually figure that out? How do I know what my risk tolerance is? Is there some kind of test I can take?
Well, it's kind of a combination of things. It's thinking about your age, how much time you have until you need the money, what your goals are, and honestly, how comfortable are you with the ups and downs of the market? How much are those going to freak you out?
Yeah, that makes sense. So like if you're younger and you're not going to need the money for a while, you can maybe take on a little bit more risk. But if you're close to retirement, probably not a good idea to be making risky bets.
Exactly. And there are actually questionnaires and things online, little quizzes you can take to try and figure out where you might fall on the risk spectrum. But ultimately, it's a personal decision.
You have to be honest with yourself.
Yeah, you got to know yourself, know what you're comfortable with.
It's exactly. Know your limits. Okay, so that's risk tolerance. What about market timing? It always stresses me out, trying to figure out the exact right time to buy or sell.
Oh, yeah, market timing. That's the dream, right?
Right. If you could just time it perfectly, you'd be rich.
Exactly. Everyone wants to find the secret formula. But the reality is it's incredibly difficult to do well, especially over a long period of time.
So don't even try.
I don't want to say don't even try. I mean, there's some people out there, professional traders, who can kind of time the market in the short term.
Right.
But for most people, it's just not a good strategy. You're more likely to lose money than to make money.
Okay. So if trying to be a market timing genius isn't the answer, what should people be focusing on?
Well, for most people, it really is about long-term investing.
Okay. I hear that term a lot, long-term investing. What does it actually mean in practice?
It's pretty straightforward, really. It means you buy something and you hold on to it for the long haul.
Okay.
You don't worry about the day-to-day ups and downs. You just kind of ride it out.
So you have to be able to stomach some volatility.
For sure. But the good news is when you do that, when you invest for the long term, you actually benefit from this magical thing called compounding.
Compounding, yeah, that's another one of those terms that gets thrown around.
Right. But it's super powerful. It basically means you're earning returns on top of your returns.
So it's like a snowball effect.
Yeah.
Your money just keeps growing faster and faster.
Yeah, exactly. The longer you let it ride, the more powerful it gets.
Got it. Compounding. It's a good thing.
It's a very good thing.
Okay, so that's long-term investing. Now, what about growth investing? Is that the same thing or is that different?
So long-term investing is more about how long you're planning to hold your investments.
Okay,
Growth investing is more about the kinds of companies you're buying.
gotcha. So with growth investing, what kind of companies are we talking about?
Growth investors are looking for the companies that they think are going to grow really fast,
Okay,
faster than average. They want those companies that are going to increase their earnings and revenue at a really rapid pace.
so they want to find the next Google or Amazon, the
Yeah.
companies that are really going to change the game.
Exactly. And, it can be a really great way to make a lot of money if you're right, if you pick the right companies, but it can also be riskier.
Because there's no guarantee that those companies are actually going to live up to the hype.
Exactly. They often trade at a higher price because people are so excited about their potential. So if they don't meet those expectations, the stock price could drop pretty dramatically.
So you really got to do your homework before jumping into those growth stocks.
Oh, absolutely. Big time. Now, on the other end of the spectrum, there's something called value investing.
Okay, so if growth investing is about finding those superstars, what is value investing all about?
Value investing is more about finding those hidden gems, those diamonds in the rough that the market might be overlooking.
Okay.
So they look for companies that are really solid, fundamentally sound, but for whatever reason, the market hasn't caught on to how good they are yet.
So the stock price is lower than it should be.
Right. It's like finding something amazing on clearance.
I can get behind that.
Yeah.
Who doesn't love a good deal? But it takes patience, I'm guessing.
Oh, yeah, for sure. Value investing is all about patience because it might take a while for other investors to see what you see, to recognize the value. So you got to be willing to wait it out.
It's a long game?
It's a long game, but it can pay off big time for those who have the patience and the discipline to stick with it.
Patience and discipline. I'm starting to sense a theme here.
Right. Those are kind of the keys to investing.
Right. Okay, so we've talked about a lot of different investing styles, strategies, things to watch out for, but I feel like we're missing one crucial element here, the human element.
Oh, absolutely.
We've talked a lot about logic and numbers and charts, but we haven't talked that much about emotions. How do emotions play into investing? Because I feel like that's a big part of it.
It's huge. You can have the best plan in the world, the best strategies, but if you let your emotions get the best of you, it can all go out the window really quickly.
Totally. Like when the market is doing well, you feel amazing. Right? Like you can do no wrong. But when it's tanking, it's easy to spiral and make decisions based on fear.
It's like a roller coaster.
Yeah.
And those emotional decisions are usually the ones you end up regretting.
So what's the key to keeping those emotions in check?
Well, a lot of it goes back to having a solid plan that you've thought through ahead of time.
So when you're tempted to make a move based on how you're feeling at the moment, you can look at your plan and say, wait a minute, is this actually the right move?
Exactly. Don't let your feelings make decisions for you.
Your emotions can lie to you.
All the time.
That's good advice. Okay, so speaking of plans, you mentioned having an investment plan. And I feel like, for me, that always seemed like something that only rich people or, professionals needed. But you're saying that's not true.
Not at all. It doesn't matter how much money you have, whether you're just starting out or you've been investing for years, everyone needs a plan.
Okay, so what does an investment plan actually look like? And how do you even start to create one?
Think of it like a roadmap. It lays out exactly what you're trying to achieve with your money, how much risk you're comfortable taking, how long you plan to invest your money for, and how you want to divide it up between different types of investments.
So it's about getting super clear on your goals and the path you're going to take to reach them.
Exactly. It helps you stay on track, avoid those emotional decisions we talked about, and it makes sure that everything you're doing with your money is moving you towards your ultimate goals.
It sounds like a must-have for anyone who's serious about investing.
For sure. And don't be afraid to get help if you need it. There are professionals out there who can help you put together a plan that makes sense for you.
Yeah, don't be afraid to ask for help.
Mm.
Okay, so as we wrap up this incredible deep dive, is there any final piece of wisdom that you would impart to our listeners as they try to make sense of these crazy markets?
I think the most important thing to remember is that investing isn't a one-time thing. It's not something you just do once and then forget about it. It's a lifelong journey.
I like that.
It's about constantly learning and adapting and making smart decisions along the way.
So stay curious, stay informed. Don't be afraid to ask questions.
Yes.
This has been amazing. We've covered so much ground today, everything from specific sectors to, those big picture ideas that every investor should know.
It's been a blast.
I feel like I learned a ton.
Not good.
And I hope our listeners did too.
Me too.
So remember, everyone, stay informed, be patient, and make those decisions that are right for you and your goals.
You got it.
That's it for today's deep dive. We'll see you next time.